Aloha and welcome to what is the 5th episode of the COVID-19 Business Assistance Series. My name is Annette Lynch. I'm with Maui Economic Development Board, the host of this series, and I want to express our thanks to the County of Maui who support the series and supporting you, our small business owners of Maui, and other small business owners that are tuning into this webcast. We've had a wonderful response to joining us here today, where we're going to guide you and walk you through the forgiveness application for the Paycheck Protection Program. A little bit of housekeeping, just so if you haven't used this this platform yet, if you go to the right, there's a little chat section that will pop up a panel where you can chat. There's Q&A. I can see some chats coming in already. You might have to refresh. I'm just seeing I do not seem to have audio. You may have to refresh. Got it. Excellent. So it'll be part of your system. So just check where the audio settings are for that. If you have questions specifically about the content, we're looking at questions about the forgiveness application specific, then pop them into the Q&A. That's the questions we're going to answer at the end of the presentation. So pop all those questions if you want to be, rather than the chat, if you want your questions answered. We do have some polls that popped up as you came in, and I'm going to just pop 2 more in there. I want to look at how you feel, how prepared you feel applying for forgiveness. Plus, where's my little setup? Also want to see how are you going with hiring, in the past, were you able to hire your employees back? And what percentage of your employees were you able to hire back? So just to give us some information as we're going along. So please answer those polls. This webcast is being recorded, and we will be posting that and sending you out the link so you can refresh, or if you have to leave us, hopefully you don't, to be able to access all this information. And we also will be sharing the slide deck, so you'll have that as a resource. So I'm going to hand over the microphone to Gerry Smith and Wayne Wong, who are our presenters. Gerry being Director of Business Development with the Maui Economic Development Board, and Wayne Wong, the Director of the Small Business Development Center on Maui. I see we've lost Gerry's camera for the time being. He's backed out, but I'm sure we can hear his voice. So Gerry, take it away. Wayne, perhaps you want to start it off.
Sure. So thanks everybody for attending. This will be a pretty timely topic. However, like we said with all the other PPP webinars, this is also subject to change. One of the things that is the focus of today is about the EZ application for loan forgiveness, and we're going to make a case for making sure that you are seeing why you would want to probably stay with the 8 weeks as your covered period, as opposed to the new option, which is to extend your covered period for 24 weeks. So in this webinar, we are introducing the PPP loan forgiveness application easy. There is also the standard form, which has been revised, but it is standard. We'll talk about why would you use the easy versus the standard. We'll show you how to fill out the easy form, and then a little background in terms of how the calculation all work so that you can populate it. So in this presentation, we're assuming that you've been operating under the 8-week guidance. You are near or past the end of your 8-week covered period, and you have been able to successfully fully staff to pre-COVID levels, barring safe harbors, or you are self-employed and receive the PPP. So these last 2 things are actually conditions for using the easy form. If you haven't met these criteria, then you'll have to use the standard form. Next slide. So again, who can use the easy form as opposed to the standard? And it's criteria number 1 is it should be used by self-employed independent contractors, and businesses who have received PPP loans. And basically, this category is nice because you don't really have the pre-COVID employee headcount consideration to deal with. So because you have a simpler case, it's definitely a good reason to use the easy form over the standard. So who cannot use the form? You can't use the easy form if you reduce the employees below pre-COVID levels through your covered period, and the easy form cannot be used if you reduce the individual salaries by more than 25%. So essentially what they're saying is if you have a case where you would meet the criteria for full forgiveness, the easy form is a really quick way to put in an application for forgiveness. If you haven't met any of the criteria, you'll probably have to go into the standard form where you can perform all the calculations to figure out partial forgiveness. That's really, in a sense, an easy way to break it out. If you're going to get full forgiveness, easy form is probably going to be the right one for you. If you need to have a calculation because you're only going to get partial forgiveness, you definitely will be using the standard form. Oh, Jerry's back.
Sorry about that. We had to do some scrambling. So thank you, Wayne, for covering there. I guess we're down to who cannot use the form, and so you can't use the form if you reduced your employees to below pre-COVID levels through the covered period. And then you can't use the form if you reduced salaries. Okay, so the next slide then. Wayne.
Oh, so that's me. So I thought we'd step back a little bit to talk about what happened before Easy and probably the last time you were told about forgiveness. So on June 4th, there was the Ppp FA, which is the Ppp Flexibility Act that was passed on June 4th. And during this, they made some changes to forgiveness criteria in order to make it easier or give you more flexibility to reach full forgiveness. So in just a few bullets, this is the summary of what happened in the Flexibility Act. So the first thing was the 8-week covered period, which is the period you can use your PPP funds, was extended from 8 weeks optionally to 24 weeks. The good news is it's optional, and you'll hear why you want to carefully choose which option to do. The second thing was the final cutoff date for the PPP program was June 30, which meant you had to have all your criteria and a whole bunch of other stuff done by June 30, including no more PPP applications could be taken. That now has been extended to the end of the year, December 31st, with the exception of applications. So PPP applications will still close on June 30. And if you've been watching the news, there's already talk about PPP 4. But again, that's all conversations, and we have no dates for that. Previously, in terms of forgiveness criteria, you had to spend at least 75% of the funds on payroll. That was reduced to 60%. So if you meet the 60% spend on payroll costs, 60% of your loan amount on payroll, that was criteria number 1 for full forgiveness. The second thing had to do with the head count or FTE count, which is you're supposed to get back to pre-COVID levels. So what's interesting is several safe harbors which gave you allowable reductions of headcounts were clarified, and it was actually pretty lenient, and it answers some questions like, what if you took your best effort, tried to hire the people back, and you got some back and they were fired for cause? That's actually one of the allowed reductions. If your employee, and a lot of people heard this, they rejected your offer to come back because the pandemic unemployment was so much better than their normal pay. So it turns out that if you provided a written re-employment offer for the same salary and hours, and they chose to, in writing, decline, that becomes now an allowable reduction in your headcount. There's some ramifications to that in terms of that puts the employee in a fraud situation with the unemployment office, but that's a problem with another agency. So anyway, one of the things that happened in this Flexibility Act was there's some clarity around headcount safe harbors, which is allowable reductions to getting to the full COVID-19, the pre-COVID-19 levels. And then the final thing was just that forgiveness application forms were republished. And so the standard form that was given before was corrected. And then a new easy version has been released, which is the topic for today. So back to the question in more detail about who can use the easy form. So you, the borrower, can apply for forgiveness using this 3508 easy. So they give you essentially 3 categories. And so if you can meet at least one of the categories, then the easy form is for you. So the first one is that you are a self-employed individual. Either you are an independent contractor, a sole proprietor. In essence, you had no employees at the time of your PPP loan application. What's nice about this is ideal for the easy form because all you have to do, you don't have to worry about head count because you didn't have employees and you had a count of 1, which was yourself. And so you just had to meet the 60% spend on payroll costs. So this is an ideal case for utilizing the easy form. Next slide. So the second case for using the form is that you did not reduce the annual salary or the hourly wages of any employee by more than 25%. So that was one of the rules about forgiveness. And if you look, what we're saying again is if you followed the rules and if it looks really good that you're going to get full forgiveness, the easy form is for you. So by saying that this is, if you did not reduce the annual salary or hourly wages by more than 25%, you qualify because you're a good candidate. And then the second condition of this category is that you did not reduce the number of employees or the average paid hours of the employees. Although the caveat is that you can actually, with the safe harbors, have a reduction. So you could have reduced the number of employees, but only for specific cases that are covered by the safe harbor. So what are they saying again? If you followed the rules and if you were able to actually get to the criteria as already established for full forgiveness, the easy form is for you to use. And in the third category, next slide. So the first part of the category is exactly what we said in the previous category, where, as long as you did not reduce the annual salary or hourly wages of any employee by more than 25%. The second condition to this third category is that the borrower, which is you, was unable to operate during the covered period at the same level as pre-COVID due to compliance requirements of an established guidance issue, and it didn't say it here, but it says it in others, to maintain standards of sanitation and social distancing. So the case obviously for that is if you have a restaurant and you didn't bring all the employees back, but it was because you couldn't open, or you had to operate only under takeout rules, or like what's happening now in the slow opening, you're not allowed to have more than 50% of your seating capacity utilized, even if you're able to do the 6 the 6-foot distancing. So again, what are they saying with this category? As you know, it looks like you can meet the head count, looks like you didn't abuse the hourly and wage and salary. So chances are really good that you're going to get full forgiveness. Hence, because you don't need to calculate partial forgiveness, the easy form is for you.
Thank you very much, Wayne. So I want to just jump back in time because I skipped out there for a second. And I apologize, but I want to go back to the target audiences that we're talking about here. That's going to provide the biggest assistance. And so, if you've been operating under 8-week guidance already, and if you are near or past the end of your 8-week covered period, and you are fully staffed. So that's sort of the target here. And then of course the second one is that if you're self-employed and don't have employees. So let's look at this. There's some compensation caps. So I did see a question pop up under the thing already. And so does having a over $100,000 employee disqualify you from using the easy? No, it doesn't. What you have to do is normalize the salary to $100,000. There's a lot of information on this slide, and we're going to refer to this in just a couple of minutes. But it's got so much information on there that I wanted to keep it in the slide deck, so that if you guys download it, then all that information's there. And basically, you just have to consider that that you just can't pay anybody. You can pay somebody over $100,000. You just can't claim that. So. Let's take a look at what we're going to do now. Is we're going to step through again. I'm assuming that you have been operating under an 8-week guidance, that you are approaching the end of your covered period or are there. I'm assuming you're fully staffed in this, and so let's take a look and see what that looks like. Let's see what filling out the form looks like.
So here's what the form looks like. We are going to start at the top here and just populate it with some basic information. Here's where you're going to put your legal name. If your DBA or trade name is different than your legal name, then you would indicate that. Here, your business address is 1234 Main Street or wherever. Your EIN or SSN would go here, your business phone here, primary contact person here, your email address. And then it's going to ask you for things like, what is your current SBA PPP loan number and what is your current lender PPP loan number? This is for tracking. For the purposes of my experiment here, I'm going to use $100,000 as the PPP loan amount. It's just easier to calculate round numbers. And then my loan disbursement date, or the date that it hit my bank account, is 4/22/20. That's April 22nd. When I applied 2.5 months ago, I had 6 employees. However, at the time of forgiveness, which is the time that I'm filling out this form, I had 4. If you have an EIDL advance amount, you would put that here, and the EIDL application number would go here. For the purposes of my example, I'm going to use a weekly payroll period. That means I pay people every week. Typically, the pay period would end on a Sunday, so it would go from Monday to Sunday. But we need to calculate what this covered period actually is. And what the covered period is a period of 56 days, or the disbursement date plus 55 days. So let's go look at what that actually means. So if my PPP funded date was 4/22/20, then what we're going to have to calculate is 55 days after that, and that is 6/16/20. So my covered period, my 8-week covered period, starts on the day that I got the funds, and it ends 56 days later. Now let's look at a calendar and see how this works out. So it turns out that it doesn't work out so well for me. The 22nd, the day that my PPP funded, was on a Wednesday. this does not coincide with my payroll schedule. So what I'm going to do is I'm going to push it forward so that it starts on the same day as my pay period starts. So I'm going to push it forward to the 27th and see what that does. So it's completely okay for me to choose an alternative 8-week covered period start. So if I choose 4/27/20, that gives me an 8-week period that begins on 4/27 and ends on 6/21. Now let's go back to the calendar and see how that works. So if I start then on April 27th, then it now matches my pay periods, because every week of the 8 weeks, 1, 2, 3, 4, 5, 6, 7, 8, is going to end on the 21st of June. That gives me 8 weeks of covered period that matches my payroll schedule. So what I did was I went back to the form here, and I'm able to fill in the alternative payroll covered period of 4/27/20 to 6/21/20, and what I'm going to do is I'll leave the covered period blank. Now, if your loan's in excess of $2 million, unfortunately you're going to have to check that box, and what that does is it almost guarantees you that you're going to have to get audited. So that brings us to line 1, and that is payroll and non-payroll costs. So what are payroll costs? That's the first thing we're going to have to calculate. I jumped over real quick to the instructions for line 1, and there's really a lot of things that you need to take out of this, but you should really understand these instructions. So take a look at this before you're filling it out. Now, there's 3 kinds of payroll compensation. There's cash compensation. That's when you pay somebody a check or you fund their medical leave or sick leave or any of that type of stuff. There are employee benefits, which are benefits like health insurance, 401k, state and local taxes such as unemployment that are the business portion. And then the last thing is owner compensation. That's treated a little different than employee compensation. There are limits that you need to understand with compensation, and it's pretty much based around $100,000 as an annual salary. So let's take a look at some of those limits. I won't spend a huge amount of time on this because you can download this PowerPoint presentation, or you can just look at the instructions. But basically, it's centered around $100,000 annual salary. So if you take $100,000 and divide it by 52 weeks in a year, it gives you this number of 1,923. 1,923 times 8 is 15,385. So the owner's portion and the employee's portion both are capped at the equivalent of $100,000 of annual salary. Now, the 24-week limits are a little different, but for now, let's just focus on the 8-week limits because that's the example we're going with. In order to calculate how much I paid all of my employees in cash compensation, I created this table, little Excel table, and I put my 8 weeks of covered period across the top, and then I put my employees down the side. Now remember I said I had 6 employees before. Here the 6 are, and I'm not counting myself as the owner. That's why I'm bold in italics that way, is to identify me as an owner, just to keep me separate. So basically there's 4 categories of people. There's owners, there are employees who make the equivalent of over $100,000, and there are employees who make the equivalent of under $100,000. And then there's employees that did not come back at all. You can see that both John and Wayne did not return to work, and we're going to talk a lot more about that in just a bit. Now, I've applied the limits here. Again, $2,000 times 8, that's $16,000. I can't report 16,000. I can only go to the cap, which is 15,384 for both the owner and for Donnie here, who's over the $100,000. And just as a little cross check here, if you take 2,000 times 52, you know that's $104,000. That's why it's a little too much. So down here, I've added all of these together to get a total of $56,869. But I've also broken out the owner portion, the people who are under $100,000 portion, and the people who are over $100,000. If you have to fill out the long form, you are going to need to know that separately. For the easy form, it's not critical, but I've included it there anyway. So I know that the amount of money that I've paid in cash compensation to my employees and owners, the line 1 amount adds up to $56,869. However, that is not 60%, but there's other payroll costs that I need to add in that are legitimate payroll costs. And let's take a look at what they might be. So there are other forms of payroll costs, and what I did was I created another table. The table has the same dates as above because, again, you're limited to that 8-week period. So what I did was I entered the amount of company health insurance, employer paid 401k match, and then unemployment insurance, which gives me a total of $12,000 of additional payroll costs, which if I add to the cash compensation from the above calculation, which was $56,800, I'm at a total payroll cost of $68,869.23. And it's pretty obvious that that's higher than 60%. So let's go ahead and populate the form with that $68,000. So that's it. That's how I calculated line 1. That's how we get $68,869 by adding up all the payroll costs. Now let's look at lines 2, 3, and 4. Those are not payroll costs. Those are other costs that are non-payroll, but they are legitimate as well. So let's take a look at business mortgage interest, business rent, and business utility payments. And in order to calculate those, I've created another table in a spreadsheet, so let's take a look at that. So here's a table I created for non-payroll costs, and it's the same period of performance, it's the same covered period across the top, but now what I've done is I've added 2 rent payments, 2 electric payments, water, telephone, internet. I left business mortgage interest blank. I didn't have a business mortgage interest, but if you do have a mortgage, then you're allowed to you're allowed to use the interest here. So this is about what, $8,360 worth of utilities and $20,000 worth of rent. So now I'm going to go back to the form and populate that. Again, it's just adding up all the expenses that I had across that 8-week covered period. So here I am back at the form, and I've populated my mortgage interest with 0, my lease and rent payments with $20,000, my business utility payments at $8,360. Line 5 is asking me just to add lines 1, 2, 3, and 4, which I've done here at $97,229. Line 6 asks for a PPP loan amount, that's $100,000, very straightforward. And line 7 asks me to divide line 1 by 60%. And that gives me a number that if I did not spend a lot of money on payroll, then this number would be lower. And then the forgiveness amount is simply the number that is the smallest of lines 5, 6, and 7. Now, that's an 8-week example. Let's take a look and see what 24 weeks does. Now, that's an 8-week example. Let's take a look and see what 24 weeks does. Okay. So I've been browsing the questions, and so some of you I have asked great questions, and I'm getting to it. And so this is one right here that someone's asked. So that is a scenario where if you had an 8-week PPP, you would essentially be done because you have maintained your employees through the entire covered period. And in this case, the covered period, it was actually the alternative covered period, is an 8-week period. So as long as your costs are within that 8-week period, whether they're payroll or non-payroll costs, then you're good to go. So this is an example of someone who's self-employed. And so the last example was for a business that had some employees and was able to keep them through the entire covered period. But this is for, let me just give you a refresher here. This is the loan application that you applied for approximately 2.5 months ago, or 2 months ago, or whenever it was that you actually applied. And there's 3 things that you filled in. Number 1, you checked the box at the top that said self-employed. Number 2, you checked the average monthly payroll, and likely you derived that from your 2019 Schedule C. And then in this case, $5,000 monthly payroll means a Schedule C line 31 of $60,000. And so then your PPP loan amount would have been for $12,500 in this example of a self-employed. So let's jump to the next screen. And so we've got, here it is again, the self-employed, and then here's the Schedule C, which is $60,000. And so if, when you applied for your PPP, you used Schedule C, line 31, that's the number that you received as a PPP. Now, the 24-week option maxes out owner compensation as the lesser of whatever's on Schedule C, line 31, divided by 12 times 2.5, the exact same calculation that we looked at above, or $20,833. And $20,833 is the equivalent of taking $100,000 and dividing it by 12 and multiplying it by 2.5. My point here, though, in the example where the Schedule C reported $60,000 and therefore your PPP loan was $12,500, that $12,500 amount can be entered into line 1 and you're done. And the reason you're done is because you've hit 60%, more than 60% of your costs have been on payroll. So one of the keys for this EZ form is that it's very, very simple for a self-employed to receive full forgiveness. And when I say full forgiveness, in this case, you would have been forgiven for the full $12,500. And again, anything over and above $100,000 would not be, you wouldn't have that on your PPP. The maximum that you could have was $20,833. So let's take a look at the next one. So let me just to review. So those were the 2 examples of people that, for lack of a better word, could get out of Dodge right now. You can get this loan off your books. You can move forward. You can do a lot of things. However, there is the option to extend this for 24 weeks. And so with that, I'm going to pass it back to Wayne.
Okay, so what you're looking at on the screen right now is page 4 of the easy form instructions. And essentially what this is telling you is what are the documents that you as the borrower have to submit along with your loan forgiveness application. Essentially, as you read through all of this text, it's basically saying that you have to provide documents that prove that you're verifying the number of full-time equivalent employees on payroll, their pay rates, the periods that you use to verify them. Essentially, a lot of the documents that mimic what Gerry showed you on the Excel forms would be fine as long as it was either a government form, like a tax form, or a payroll report that was provided by your payroll provider. So it basically says you have to use these things to demonstrate all the numbers that you're purporting in your account, and that would be constituted by documents such as bank account statements, canceled checks, payroll tax forms, payroll receipts, canceled checks, statements. The third-party payroll provider reports are kind of an interesting thing. So if you have a payroll provider, many of them as a service to their customers who have PPP loans are providing the correct documentation required for you to submit to justify the numbers that you're going to be putting down. This page also talks about documents that need to be maintained and retained, but they're actually not going to be submitted. So there are things like payroll schedules. If you are using some of the safe harbor documentation regarding employee written job offer refusals, documentation that shows that you are under a mandate that provided an inability to rehire individuals, and the same thing about unable to operate at the same level of business activity due to maintaining standards of sanitation. So these safe harbor things and how you are able to reduce your numbers. You have to have documentation for that, but that's not going to be asked for when you go to the bank. And then the other thing to know is that at the very bottom of this page, which I don't think it shows, but the other thing to know is that all of your files need to be retained for at least 6 years after the date that the loan is either forgiven or repaid in full. And the SBA and the Treasury Department reserves the right to access such files upon request. So this is the same thing continuing on, and then at the very bottom is where it talks about retaining your documents for at least 6 years. So the other thing that will be in this easy form, and this is just like the application, you know, a lot of this has to do with intent, and even though you may not have numbers to justify certain things, you are being asked to self-certify, which means here are some statements, and you must initial to say that you certify the following items. And so there's a whole page of this that you have to check in, and at the bottom there's one that basically say that about the use of the PPP loan, you have to check one of the two on the bottom. So these are pretty self-explanatory, but just understand that you do have to initial each one of those, and that is an act of certification that you have followed these things.
There we are. So there's some forms and tools that we're sharing on this, and by all means download this PowerPoint. It should give you a little assistance when you're filling out your application. So there's the 3508EZ application and 3508EZ instructions, and they're both there at the Treasury website. The link is right there. There's also the form 3508 and the 3508 instructions. And so the easy form is, like, for lack of a better word, really easy when compared to the form 3508. And so If you did not hire employees back and we're back up to pre-COVID strength, so to speak, through your covered period, then you're going to have to use Form 3508. There's some other scenarios too, where you might, Wayne, can you think of another scenario where you need to use the 3508? Certainly if you reduce someone's salary by more than 25%, then you're going to have to do the calculations through that. And I just wanted to throw out there that as we were going through this thing, or as we were going through the example, I created a spreadsheet there, and you're more than welcome to take it and try it and see if it helps you sort your numbers out. And I don't know if Wayne covered this earlier, but I want to go back to it if I can. The payroll service providers are doing a great job with this PPP. So if you have a payroll service provider, talk to them before you start trying to dig through, checks and records and that sort of thing, because they might be able to provide this for you very easily. So work with your payroll provider for sure. Annette, I think that's over to you.
All right, I'll put my video back on. So we have a bunch of questions that have come through. We do have the resources as well. We've posted them in the chat so that you've got an easy, quick link to especially the forms and the that spreadsheet resource where you'll sign up and you can have straight away access to that. So use that. So let's have a look at some of the questions. And I know we've answered some of them, whether through the presentation accidentally. Yeah, we'll start at the top. So do you want to read them out, Gerry, or do you want to select the ones you want to answer?
Well, we'll just start at the first one because I know the answer to that one, so I'll take that one. What happens if I use all my PP funds and that cannot afford to keep my doors open? Can I still apply for forgiveness? Well, I'm gonna interpret from your question that you're using that you've used those funds within the 8-week period. The people that I've talked to and have helped, and maybe it's just coincidence, but they're not finding it difficult to spend the money they received in the 8 weeks. So if you spend that money in the 8 weeks, and if you kept your employees, then I believe that you can just file an 8-week PPP and 8-week forgiveness and be done with this thing. I see there's 4 upvotes. Wayne, do you have a comment about that?
Yeah, so the one comment that I would make is there is some interpretation in terms of the definition for the covered period. And it's not the difference between 8 or 24. It has to do with at what point do you have to maintain these standards. So, and I think to this question, it is a question of the interpretation of which we're waiting for the SBA to come out with clearance. And so what I mean by that is, when you're talking about you can't afford to keep the doors open, can you apply for forgiveness? So one interpretation is as long as you maintain that head count during the covered period, the whole covered period. If that's the case, yes, once the covered period is over, that's all you're reporting on for forgiveness, you're good. What happens after the covered period has, like, in a sense, no reporting. So it doesn't, it matters to people's lives, but it doesn't matter from a forgiveness perspective. The other interpretation is that you meet these thresholds within the covered period, and then you can apply for forgiveness. And basically, as long as you attained it, again, it's a threshold, right? So once you meet those triggers, even if you decide to close, it should not affect your forgiveness. So that's the interpretation we need clarity on. Some people are saying it has to be for the whole covered period. Other people are saying it just has to happen within the covered period.
I would say you could cut out the middle part of this, and it says, what happens if I use up all my PP funds? Can I still apply for forgiveness? And the answer is yes. I would say that it is irrelevant whether you're keeping their doors open or not. If you've operated under that 8-week period and have expended the funds, then if just following the example that we did, I don't see any reason why you would not be fully forgiven for that. Also, if you do the math, if you look at the form, like Wayne and I, we have a lot of discussions about, like what the intent is and that kind of thing. And if you look at the form, at the very bottom, there's 3 calculations, and you're supposed to pick the lowest one. So if you've expended all of the funds and you've done it appropriately by payroll 60%, then you're gonna, it seems to me that you're gonna be forgiven. So the answer to that one is yes. So to the next one. Oh, sorry.
Yeah, the next 2 questions are fairly similar about that 24-week period, and if people use their expenses up earlier than that, so you might want to combine those 2.
Okay. So let me just explain one thing that Wayne and I are kind of going back and forth over is the covered period and what it means when you say that that you're, in order to certify, you would need to use you would need to have all your employees for the covered period, and so one interpretation of that is that you would need to have all the employees for 24 weeks. Now, if you do the math, then I agree that you would be able to apply for forgiveness at an earlier time if you had spent the money. But what's unclear to us is how the forgiveness works out if the employees, if you shut the doors and don't have the employees for the full 24 weeks, which is why it might be an advantage if you have spent all the money in the 8 weeks, that you just proceed and move forward. Wayne, check me.
Yeah, so I agree with what you're saying. And then the question always is, because remember, this is an application for forgiveness. It's not necessarily an application about auditing you for how the money is used, right? So if you reach the forgiveness point in the covered period, make your application, get the forgiveness. Whether you have PPP money or not, all you have to do to stay legal is, even after the PPP period has ended, if you still have PPP money, the ideal thing is it's no longer a loan. You still have money, but it still has only certain allowable uses. And so for some people, what that means is they got money left over, it's all forgiven, and so they go ahead and just put it all to something that really is hurting them, which is rent or utilities, right? So the allowable uses of PPP money doesn't change. What we're worried about is how much of it is forgiven versus how much of it ends up as a loan. So all that kind of comes into play. So it's not about utilizing all the money in order to get forgiveness. You only need to show, in terms of money utilization, the 60% spent on payroll costs, right? And so what we're trying to do is get full forgiveness. And then once you have that, whether you have money left over or not is kind of immaterial, but be aware that by the contract that you've made with the government, you only have certain allowable uses. So you can't now take the money and, I don't know, repay another loan or something like that.
Right.
I mean, that's definitely
Start a
not
business.
allowable. But try to keep clarity around spending the money and then what happens in the covered period for forgiveness.
And to answer, whoops, I moved on the thing. The question was, well, I lost the question, but I want to read the statement that's on the PowerPoint that was taken directly from the application instructions. And it says, the borrower did not reduce the number of employees or the average paid hours of employees between January 1, 2020 and the end of the covered period. And then it says, ignore reductions from the inability to rehire and ignore reductions if you were unable to get a similarly qualified employee or the employee refused. So those are your sort of safe harbors, get out of jails. But it does say the end of the covered period. So you really do need to kind of consider what you want your covered period to be. So for the person that said that they were considering shutting the doors, if you run through 8 weeks and shut the doors, that's a lot different than running for 24 weeks and shutting the doors then, because if just going by what it says there, that it needs to be the entire covered period for FTEs. Again, we're going to seek clarification on that as best we can, and direction does come out. There's been 5 different final rules. So, and that's another concern that I have is that if you are operating under the 8-week covered period, and you want to be done with this thing, then you're operating under the set of rules that's actually in place right now. So we're still a little sketchy about the 24 or what some of the FTE requirements in the 24 week period are. But take a look at the PowerPoint and take a look at the instructions. That's my best advice. What number are we on, Annette?
Did you inquire about, did you see the one about the LLC filing?
Okay, with an LLC filing as an S Corp, since the owner is on payroll, should his salary be listed on line 3 or 5 or in line 9 of Schedule A? Oh, so this person is not using the EZ form. The owner does not appear on Schedule A. The owner appears in a different line, and I don't have that open right now. But the answer to that question is the salary is not part of the Table A, nor is it part of Table or Table A and Table B. I think that's the one you're referring to on the 3508. And if that's the case, those 3 numbers go in 3 different places. There's you have to get to the cover sheet, I think, to find the one that says owner, but it's on there.
Okay.
How do you count the number of employees in the 2 parts? How do you count the number of employees in the 2 parts? At the time of application, at the time of forgiveness. I could give you a mathematical formula. Wayne, do you want to touch on that?
Well, again, it's interpreted in trying to interpret what they're asking for. I'm assuming that when you're saying the 2 parts, you're saying that you did a certain calculation for your application, and then now at time of forgiveness, you're being asked again for the pre-COVID percentage. How tied are you to what you put on your application? And the answer is, in a sense, you're not tied to what was in the application to the letter, but you do have to re-show that documentation. So in your application, you use the 941. When you do your forgiveness, you'll have to show the 941 again to show the pre-COVID amount, especially if it's going to be different than what you had on your application. So I'm not sure if that's the 2 parts that you were talking about.
So I want to talk about my the example that I did, and I kind of glossed over. There was two fields. I think they were John and Wayne that ended up being blank because I couldn't get them back. And so the 24-week period gives you a lot more time to get people back. But if in the example that I had, there were seven people that worked there. One was the owner, that was me. There were 6 other employees. 2 wouldn't come back. If you look at the sheet, one of them refused to come back, and I think the other one was couldn't be replaced because it was a highly skilled position. Those 2 are not going to count against you because that's the certification that you're making. That Wayne went over a bunch of those certifications. That you're saying that you didn't reduce your head count beyond those safe harbors. So I had 7. Minus 1 because I'm the owner. So I started with 6. I ended up at 4 when I did my forgiveness application. The missing 2 were those 2 people that were safe harbor for me. So maybe that helps, Aggie, with your question as well. Payroll taxes besides SUTA. Any the employer portions of taxes. I can't. Can you think of another one besides unemployment, Wayne?
No, but as long as it's the employer contribution and as long as it's not federal.
Right. And okay, Missy, if you use 24 weeks and use up funds before the end of 24 weeks, do you still have to have FTE count at the end of 24 weeks in order to get full forgiveness? Wayne and I are wrestling over this one. It seems to me that if you run out of money before the 24 weeks and you document that and you've met the requirements for full forgiveness, then you should be good to go. But we're not exactly sure if you need to keep that full FTE count for the full 24 weeks. So we're gonna figure that out. But the guidance at this point isn't specific enough to tell us that. Wayne, you want to chip in on that?
Nope. So that's exactly what we had been talking about. There is that whole question about once you hit the thresholds, do you have to maintain all the way to the end of your covered period, or once you hit the thresholds, you're ready to apply and you're sort of good to go? Because the ramification of this, and this is one of the questions where while 24 weeks sounded great, you got all this extra time, but you only got 2.5 months of payroll money, and you almost always, unless you have a very, weird situation, you're gonna run out of money. And so the good news is no problem meeting 60%. Problem is now you're out of money. If you got to maintain your headcount, you're talking about you got to pull it out of pocket in order to maintain the FTE count until the end of the 24 weeks. So that's what we're trying to get clarity about. And the issue is Congress, when they did the Ppp Flexibility Act, they came up with like the 24 weeks and things like that. But there's no detail as to how that's implemented. So that falls on the SBA. And the SBA has been somewhat slow in coming up with these final rules or, interim final rules. And so we actually don't have an interim final rule to define this 24-week thing. And that's what we're waiting on. That's why it can be interpreted 2 different ways. And certainly the vagueness of the way that the form is filled out, it can be interpreted either way, but there's a huge ramification to what how it needs to be interpreted.
That's right. So I think I'm going to take one more question. I want to respect everybody's time, but I'm going to take the 2 that are right next to each other because they're practically the same question. So this one says, How do self-employed or single person LLC calculate payroll? And then the next question is, how do self-employed people calculate pay period amounts? So, you know, I would say that both of those are almost irrelevant, because if you go back to download this PowerPoint, there's a slide that I talk about this. Basically, what you put in Schedule C transferred to your loan, and now forgiveness is in the same ratio. So basically, all you got to do is put the PPP amount in line 1, and you're done. And so go back and look at that slide. And self-employed people.
Is that just Gerry, or is that me
Yeah,
freezing?
I
Really
think
need to calculate.
there he is.
All right. Well, we're at the top of the hour, and we're going to thank you so much for joining us in this presentation. There are a bunch of questions still there. So as we've done with other presentations, Gerry and Wayne have been so good to follow up and answer these questions, and we'll post them online along with the PowerPoint. We had some queries about the spreadsheet, and I believe I fixed that, but we'll make sure that that's all ready to download without needing a Gmail account. And we'll be going from there. So thank you very much, and all the best with your applications. Good luck.
Thank you, everyone.
Thanks.